Good morning to everybody. Today is Monday. It's starting of a new week, and what's interesting, the end of last week was flagged by a kind of rebound in the world stock indices. As a result, most of majors was on a rebound as well. So what does it mean? That means that it will be very interesting how the situation in the world stock markets develop during the week. And from this point of view, also the United States CPI numbers, which should be published on Wednesday, should also attract a lot of attention of investors. Because the correlation between, for example, the correlation between the yields of the major bonds as well as stock indices is very tight at the moment. And it's not a secret that, for example, if the inflation report on Wednesday in the United States will be better than the market expected, it will lead to higher interest rate expectations in the United States and could dampen the stock market as well. And from this point of view, the dollar will receive additional boost, but it will be not a kind of fundamental kind of boost, base boost, but it will be a kind of a risk aversion boost of the currency, which is not a background one, underlying one, let's say so. From this point of view, we suggest that the stabilization in the world stock market could lead to a rebound between the majors in the foreign exchange market. As you can see, the euro-dollar rebounded from the lows of previous trading session, established around 122.05 to currently trading level of 122.80. The same picture we can see in cable, for example, in the dollar Swiss as well, and other major pairs like commodity block of currencies. For example, the dollar Canada, despite of the let's say gloomy employment report in Canada, and initially rebounding dollar Canada to the highs of 126.87, was corrected lower to the currently trading level of 125.60. That means that probably if the situation will stabilize around the global stock markets, it will dampen the bullish mood in the United States currency and lead the major to the underlying bullish trends. Let's see the market, let's see our strategy report and the portfolio. Now you can see that we slightly changed our strategy regarding the euro-dollar. Now we are ready to buy it around 122.20 and at the same time buy it on a possible break above 23.15. Why so? Why we're ready to buy it at 23.15? Let's see the chart of the euro-dollar. And the chart in the euro-dollar, you can see that here we have a kind of head and shoulders pattern. And if this head and shoulders pattern, I mean the shoulder, in this case right shoulder, breaks to the upside above 23, let's say 23.10, 23.15, it will mean that we could see back to our underlying bullish trend. At the same time, if we break below 21.60, this could have the currency to test its major uptrend, let's say medium to longer term uptrend, which lies around psychological important level of 120, 119.90 to be correct, to be sharp. And what's interesting, that's why we are, regarding the euro dollar, we are ready to buy it above 23.15, because our principal idea at the moment is that the foreign exchange market is more or less in the process in backing to its underlying trends of 2018. And from this point of view, the euro dollar sooner or later should go to its major bullish trend. And now we are trying to find, we are in the process of seeking the entry level, how to enter a new long position in the currency. So regarding the other pairs, the dollar yen, we are ready to sell against short-term bearish downtrend, which lies today around 109.65 with a stop above 110.50. The sterling, we still suggest that the sterling is in the major uptrend, but of course a lot of will depend on the Brexit negotiation process, on the state of the United States economy and the future of interest rates in the UK, which was supported, you can see, the last week, supported by, let's say, more hawkish expectations regarding the future path of the Bank of England interest rates. Dollar Swiss still the same. We are ready to sell at 95.30 at the moment with the stop above 95.75. We are still long in the Australian dollar against the moving average 200 daily line, which lies around 77.70. The New Zealand dollar, here we prefer to take a kind of wait and see attitude, and we'll buy it back at 71.50 on a possible retest of the moving average daily line, which intersects around 71.47. You can see this, 71.48 to be correct. But here probably we are late, because as you remember, we were long at 73 and we closed our position by stop loss, I don't remember, it was aggregated one, we closed it at 72. Probably here we were mistakenly wrong, and now it's time to buy the pair back, but we prefer to wait a little, to take a kind of standby kind of attitude before entering a new long position in the currency. In the euro yen, for example, after we closed our small long recommendation on Friday, we prefer to stand aside, because this kind of pair is very impacted to a larger extent by the situation in the stock market. And of course, you can enter a long, but if the stock market will go even slightly lower, it will mean that the euro yen will again come under the downside pressure. So we prefer to stand aside at the moment, but anyway, the trend is up. Don't forget about this. Like in the dollar Canada, the trend is down. That's all at the moment. We suggest probably this week could be a week of to be back to the underlying bearish dollar trend, but the time will show, of course. We wish you lucky trading ahead. See you later. Bye bye.